Hey guys, welcome to another episode of Full Disclosure. And today we've got an amazing guest who is a leading authority in the oil and gas industry. And our discussion today is all about the future of oil and gas. In other words, fossil fuels, right? And everything related, but also, probably most importantly, how you can make money investing in that area. And I personally believe this could be a great time to get into oil and gas as an investment. And we'll certainly talk about that. So it's an absolute honor to have our guest with us today. Folks, here we go.
If you have concerns about your financial future, let's be honest, the world shapes your wallet. We're taking you behind the scenes to look at what's really happening in the real world. Inform, prepare, and empower. This is the Full Disclosure Podcast with your host, John MacGregor.
Before we get into it, don't forget to ring that bell below and hit subscribe. I've got a loaded lineup of very successful and powerful experts like today, showing you exactly how to make money in various asset classes, no matter what's going on in the economy. So make sure you hit subscribe. And by the way, next week, we've got a 30-year Wall Street veteran who has consistently brought accurate insight and forecasts into the market. So if you have a 401k, you have an IRA, or just investments, or you're interested in the stock market, you'll definitely want to hear what he has to say. Also, I wanted to mention, as always, my cash flow masterclass is up on my website. It's been extremely popular. It's roughly 35 minutes, so it's not too long. And I teach you a very simple wealth building strategy using stocks and options. Very simple strategy to generate instant cash flow on every single trade. And by the way, this is not day trading. This is a well-proven strategy. And all I did was I codified it into a step-by-step process that many people use. Yet sadly, I'd say probably 99% actually, people have no idea it exists. And it's a strategy where you can literally create a pension for life. And as I often say, it's the exact same strategy my 93-year-old father uses to this day to generate $15,000 to $20,000 per month as a hobby. And he's been doing it consistently for the past 12 years. And by the way, I just looked at his 2023 monthly income report. And there were several months where he did north of 25,000. So check out the masterclass. It's on my website, and I think you'll find it interesting. All right, so let's get into it. It's an honor and privilege for me to introduce my good friend Mike Mauceli to the show. And Mike is the CEO at REI Energy. It's a privately owned oil and natural gas exploration and production company headquartered in Richardson, Texas. They specialize in acquisition, development, and management of oil and gas projects, starting all the way back in 1987. And Mike, I just read, in the 36 years in business, your company has operated and acquired interests internationally, offshore, and in over 3,000 wells in 11 states domestically. I mean, it's incredible. You're in Louisiana, New Mexico, Texas, Oklahoma. But the one thing that caught me by surprise is you're in California. I didn't think you'd be allowed in California, frankly. You know? because as a resident of California myself, I'm afraid one day I'm going to be arrested for mowing my lawn with a gas-powered mower. So, that's interesting. I'd love to hear that. But you've also set some amazing drilling records that I'd love for you to share. And by the way, like myself, Mike is a personal advisor to Robert Kiyosaki. And Mike and I actually, one of the last times I saw Mike, we did a course together at Arizona State University. Yeah, and that was a great time. And lastly, sorry, before I turn the mic over, I'd be remiss if I didn't mention Mike has a very popular podcast called the REI Energy Show on the Rich Dad channel, which is a great show, a phenomenal show if you want to learn how to make money in oil and gas, save a ton on taxes, generate cash flow. So definitely check that out. So Mike, with all that, welcome to the show. It's great to have you. Thank you so much for your time. I've been really looking forward to this conversation because it's so timely.
Well, thank you for inviting me, John. I mean, this is a real pleasure, and I hope I can share some insight with your listeners and, educate people a little bit about oil and gas and, what the outlook is for our industry.
Absolutely. Yeah. No, I appreciate that. Yeah, that's exactly where we went ahead. So I think for starters, Mike, why don't we kick it off and share just a little bit more about yourself, your background, how you got started, why you picked the oil and gas industry, and maybe where your company is today.
Well, I actually started in the industry, back in 1976. I started working for some oil and gas companies. I grew up in Mississippi and moved to Texas in 1980. And of course, that's when oil prices had reached about $47 a barrel. So it was an industry that I knew quite a bit about. I worked for a company which was a midstream company, which is a company that basically managed pipelines, which was Tennessee Gas, or Tenneco. And they had offered me a full-time position when I got out of college, but I wanted to get out of Mississippi, so I ended up moving to Texas and started working for some small independent companies, and primarily up in North Texas. And then from there, we went over to Louisiana and drilled some very deep, expensive wells. And I also have drilled in Argentina. We drilled the deepest discovery in the country of Argentina. We took a 2 million acre concession up in the Northwest Basin, which was about 32 miles into the rainforest. And, it's a real interesting story because not only, was it adventurous, it was also a story that really taught me a lot about oil and gas. I mean, growing up here in the United States, we're all accustomed to flipping a light switch and the lights come on, or, we've got hot water to take showers. And, when you're working in an area that is a very remote area, you don't really realize how valuable good, reliable energy is to people. I remember sitting in a town there in Argentina, and of course the lights kept going on and off, and because they were having brownouts, kind of like California is starting to have now. Yep. But they were having brownouts. So I was talking to some of the people there, and they were telling me that they've actually had people that have died on the operating table because they just didn't have access to good, reliable energy. So it really made me wake up and kind of realize why we do what we do in our business, and why we search for oil and gas. And so it was a great experience. And then of course we've drilled in Canada. I've drilled onshore, offshore, I've been in the business for about 40 years. So, I've seen a lot of it. And more recently, in the last 10 or 12 years, we primarily focused on the Bakken Shale up in North Dakota, and also in Oklahoma, the Cherokee Shale, and different shale plays in Texas.
Well, you've definitely seen it all. I don't know anyone more of an expert in oil in gas than you. So it's, like I said, it's a privilege to have you. You guys have done so much. So I guess my first question is, what is the state of the oil industry now?
Well, despite the current administration trying to put us out of business, actually, they've caused prices to spike. I think here in the United States, we are now producing close to 13.2 million barrels of oil a day, which is really a record. And it's surprising, because this administration, in fact, the Energy Information Administration, they're predicting that we'll produce over 13.4 million barrels a day next year. So companies are still pushing forward. Now, where the government has stepped in and they've tried to, basically has this war on hydrocarbons to push this green energy, agenda, they are now, obviously, they're able to control the drilling offshore in the Gulf of Mexico. So they're not issuing new permits. Now, when large companies go to drill oil and gas wells, they're looking for billion-barrel fields. They're not looking for smaller fields like a lot of the independents. And so, really stopping permitting offshore is going to have a massive effect as we move forward. Because when you got a company like Exxon or some of the larger companies, when they're discovering oil today, they usually got a 10-year outlook of when that oil is finally going to hit the market. So what a lot of people don't realize, is all the push for this green energy has been, it's really going to hamper us in the future and cause even higher prices.
So, Mike, why would an oil company like Exxon take on a major project when Biden himself said that you've got nothing to worry about? You've got 10 years before we shut down oil and gas. It's crazy.
Yeah, it really is. And it makes you wonder that these politicians actually believe that. Because when first thing that comes to people's mind when they talk about oil and gas is they're thinking about gasoline. They're thinking about gas-powered cars. Right. But really, when you look at fossil fuels overall, I mean, there's over 6,000 products that are made from fossil fuels. I mean, you have, when we build electric cars, I mean, that they use fossil fuels to build electric cars. I mean, you have to mine somewhere about, I think it's a half a ton of rare earth materials to even make a battery. And that takes diesel fuel. That takes heavy equipment. That takes, so when they go to build these electric cars, they're using a lot of fossil fuels. People that have their cell phones, there's a lot of fossil fuels that are used in manufacturing your cell phones. So to say that you're going to do away with fossil fuels and, we're going to completely stop using them in 10 years is ludicrous. I mean, it's just not going to happen.
No question about it. I mean, the shirt I'm wearing, my reading glasses, the car I drive, how I heat my home, this microphone, oil was used to build these products. So how in their right mind do they come out and say we are ending fossil fuel? I mean, Joe Biden, on the very first day of president that he took office, he killed the Keystone Pipeline. That crushed 12,000 jobs with a swipe of his pen, eliminating a very clean way to transport oil as opposed to a train or a truck. It goes against all common sense. I don't know a single president that on the first day of the job killed 12,000 jobs. I mean, it's just unbelievable. You can't do that if you tried. So Mike, given all the uses of oil and natural gas for everything that we use and consume, how can they possibly say they're getting rid of oil and gas? I don't get it.
I think a lot of these politicians don't really believe that, John. I think a lot of them are pushing for their donor base to give them money. You have a lot of these green groups out there that donate money. I mean, I think when it comes down to it, there are some very smart people in politics. Joe Biden obviously may not be one of them, but as far as some of the rest of the people, I mean, there's some pretty smart people out there that understand that fossil fuels, because if you just take wind and solar. Wind and solar, if you look at it, I mean, that's all it's going to do is just generate, random power. Mm-hmm. It takes fossil fuels to generate the equipment that build the wind system. So wind and solar really doesn't have any upside besides just generating electricity. Fossil fuels, it's basically all of its products are used in everything that we use on a daily basis. So to say that you're going to completely get rid of fossil fuels is just crazy.
So given all this, Mike, given basically this tug of war between the Biden administration or the left and reality, you say, and I've seen this before, we are at record levels in production in terms of oil. What is your outlook? What do you see going forward? Because right now oil is sitting around $71 a barrel, which is kind of low relative to where it was. What's your outlook?
Well, I think that prices are going to stay, in the $70 to $80 range. Regardless of what people say, that a lot of the prices are dictated by OPEC. Mm-hmm. OPEC is, they want to keep Brent prices. Brent crude is what, obviously worldwide crude. They want to keep that around $80 a barrel. So I think you're going to continue to see, and hopefully we're going to get a new administration in that is not going to just have this dire effect on killing the oil and gas industry. So I think overall, regardless of what happens, fossil fuels is going to continue to be. Now, are electric cars going to grow? I don't know. People don't want them. They're not able to sell them. Yep. I think in the long run, you may see more of a hybrid type car that basically has electric and also uses a combustion engine, which makes more sense to me. But I think in the overall big picture, I mean, you're going to see the hydrocarbon industry. I mean, I think the EIA, which is, kind of the Bible of the oil and gas industry, they're predicting that oil and gas is going to be the number one fuel used to generate electricity for the next 30 or 40 years.
Yeah, you mentioned hydrocarbon. I mean, I just read today there's a new discovery, a major hurdle in hydrogen energy, and it's a breakthrough, basically, marking a huge step towards viable hydrogen energy, a viable hydrogen energy economy. So it just blows my mind that we are spending trillions of dollars to go net zero, basically end the fossil fuel industry. We're setting up these charging stations for a car nobody wants. And to your point, I think if there was a push for hybrid cars, that totally makes sense. We own one, but pure electric is insane. Report came out today that the new Tesla truck, which I, by the way, just saw one for the first time. It's a really cool looking truck.
Really?
way better than the picture. I was actually impressed because the pictures do not do justice. But now it's having a horrible time in the snow, as other electric vehicles do. Their charging goes down way. In fact, we live here in a small town called Auburn, and it's in between San Francisco and Tahoe. So all the rich Bay Area people drive through this town on their way to skiing, and there's a charging station near a bowling alley, and every time I see it, there's just lines lined up of Teslas and people sitting there not only to get to the charging station, but once they get there, it's another 45-minute wait to charge their vehicle, and they've only driven 2 hours or maybe an hour and a half from the Bay Area to get there. Then they already have to stop and charge. To make a short story long, this EV push is insane. Plus, the environmental damage, as you alluded to, is crazy. In terms of the mining that's required, the child labor that's required, the amount of oil is required. What's your take on this whole EV push? Because it's happening here in California and other blue states. Newsom said no more gas-powered or combustion engines by 2030. They're basically phasing out combustion engine trucks and requiring them to be EVs. And by the way, these EVs, they are so heavy that if you get too many in an old parking garage, they will collapse because they were not designed to handle this type of weight. You can't, you can, but it's getting very expensive to insure them because the repair costs are so high, because very few mechanics know how to repair them. And then when you do, the costs are like replacing a battery costs more, well, not more, but in the $20,000 to $25,000. So what's your take on this whole thing, Mike?
Well, like yourself, I'm privileged to talk to a lot of very smart people, on my podcast. And one of the big discussions we always have is about electric cars and, where we're going. And it's like you said, obviously people don't want them. Now, are the wealthy going to own a second car that's going to be electric? I think in the end, that's what you're going to see, because the normal person, or the person that's not, obviously very wealthy, who can afford a $70,000 Tesla? Right. So, I don't see how people like, Gavin Newsom and some of these other governors that are saying that they're going to go all electric, because obviously the grid can't handle it. Yep. Not only that, these cars are very flammable, and they obviously, as you saw after the hurricane hit down in Florida, a lot of these cars were submerged by salt water, and a lot of them caught on fire and burned, and you can't just put them out.
That's right.
They sit there and burn, and they not only burned their car, but, in the parking garages where they got wet at, they also burned the house down. So they're very combustible, these batteries. And another point that you just alluded to is that, the weight of these cars, what kind of, it's going to have a tremendous effect on our roads, our buildings, our infrastructures, our parking garages. In fact, I've heard of companies that are going to start banning these cars from actually parking in parking garages because they weren't built for that. You start putting in a bunch of 5,000-pound cars or 10,000-pound cars. I don't know what that Tesla truck weighs, but I would imagine it's not very light. I know so it's just ridiculous, and it was done backwards. That's what makes me believe it was more of a deal to, obviously there's somebody making a lot of money out there off of EVs, and they're using our tax dollars. It's basically theft of the taxpayer, and to do something, because they did it backwards. If you're going to actually build this out, you should have went out and built out the infrastructure first, and put in the charging stations first before you go out and just put a bunch of cars on the road that there's no place to charge them.
Yeah, and these policies always screw the little guy, right? The middle class, lower class income person, they always are the ones that get screwed in the end. So Mike, the big question is, how dirty is oil and gas to the environment? How do you answer that?
Well, realistically, the oil and gas industry is probably the most heavily regulated industry out there, as you can imagine. And if you look at the overall research, as far as, our carbon footprint here in the United States has continued to go down. In fact, pollution has dropped close to 80%, here in the U.S. Now, and we have about 20 million people here in the U.S. 300 million people here in the U.S. We use about 20 million barrels of oil a day. Mm-hmm. But when you have countries like China and you have countries like, India mm-hmm. that are basically building more coal-powered power plants, is nothing in the pollution stage is going to change until these countries decide, and I don't think they have any issue. China loves taking our money. If we're crazy enough to build these cars and they build a coal-fired power plant right next to every one of these EV factories over in China to basically generate the electricity, they're fine with that, and I think that's what they want to do. But as far as here in the U.S., I just don't see it happening because people don't want to buy them. People don't want to be forced to buy something. It's just like taking the COVID shot, right? Mm-hmm. If the government's going to mandate you take a COVID shot, a lot of people are going to say, no, I'm not going to do it. And, as far as these electric cars, they're going to try to mandate that everybody needs to own one, and people just are going to push back against that. That's human nature.
Yeah, and who wins in all this? As you said, it's China. China loves this green initiative, this green mandate by our government, because they're getting all our money to build those solar panels and wind turbines. Yeah. So they love it. Meanwhile, they're building a coal plant every week. Once a week, a new coal plant goes up in China. This is just insanity. My technical term for it is bananas. It's just so Mike, I got to ask this, and I asked this last week. Is this really about saving the environment, or is this something else, something more deviant, like controlling our lives? I look back, going back to the 1960s, and there have been 41 dire environmental predictions. We had acid rain. We're going to freeze to death in 10 years. We're going to burn to death in 10 years. In 10 years, there'll be no more ice caps or polar bears. We're going to be overwhelmed by flooding, earthquakes, hurricanes. You go down the list. And do you know the success of every single one of those predictions? Zero. Not a single one of them have come to fruition. Not one. And yet we spend trillions of our own money, our taxpayer dollars, on these quote solutions to problems that do not exist. We destroy lives. We destroy our economy. We destroy families. We destroy businesses. These are all fear-mongering smokescreens. It's really disgraceful. So as I asked earlier, is there something bigger going on here?
Well, certainly there is. There's obviously some people are making a lot of money because when as you said, as far as all of the hurricanes and the tornadoes and stuff, realistically, it's because people are building more homes next to areas that are very susceptible to severe weather. If you want to live on the Florida coastline, you're going to have more hurricanes, if you want to live. So, it's where a lot of people are starting to live, but it makes the news now, simply because the population is continuing to grow and they want to build on these really nice areas next to the ocean. And it's just a fact that that a lot of these jobs that were supposedly green jobs that was going to be generated from this new Green New Deal and the Inflation Reduction Act. When you look at it, on all of these offshore wind companies, the majority of those companies are international companies, mm-hmm. and they get subsidies from the government in order to build these wind turbines. And you've seen more recently, like in the last couple of weeks, where a lot of these big companies are going back to the government now and saying, hey, we can't build these solar panels, we can't build these offshore wind turbines because it's too expensive. Yeah. We need more money. We need more subsidies. Mm-hmm. And I was talking with a guest earlier about these windmills And, one of the ways that these companies get around these wind turbines is that they change the blades out. So you get subsidies for every 10 years. And if you change your blades out in that 10-year period, then you turn around and you get new subsidies from the government. So they go in and they change these blades out, even though they're not at end of life. And it creates these huge, fields of debris that are basically, just deteriorating. Because when you look at say, for example, a solar field. If you look at one natural gas-fired power plant, it takes 640 acres of solar panels to generate as much electricity as one gas-fired power plant.
Wow!
So just imagine the footprint on the surface that this is going to cause and going to continue to cause. So, in my mind, obviously it's just the biggest transfer of wealth in our history.
Yeah, and once again, the little guy takes it on the chin as always. So, Mike, I want to get to how people can take advantage of where the market is, how they can make money in oil and gas. But before, I have a macro kind of economic question for you: is on the dollar, BRICS, and how that relates to oil. So, oil is traded in U.S. dollars, just like any commodity is around the world. So, countries have to convert to the dollar in order to buy and sell oil, right? And now we see BRICS, which is this conglomerate of 5 major countries. It's an acronym, for those that don't know. It stands for Brazil, Russia, India, China, and South Africa. And these 5 big countries have come together, and now I think 30 others have signed on to be a part of this. They want to create a currency, a worldwide currency backed by gold, and replace the U.S. dollar. Because you can't blame them. The U.S. has overstepped its authority with its dollar dominance, putting sanctions and restrictions on other countries because they didn't like how they behaved. So these countries are saying, well, why are we beholden to the United States when they can turn off our currency in a second? Why don't we create our own? Secondly, the U.S. says they are out of the oil industry. So why are we trading oil in a U.S. dollar when they don't even want to be a part of the oil industry? I mean, that's certainly Saudi Arabia's take. So, Mike, if this happens and we see a replacement of the dollar, it's not going to happen overnight, but it's gradual. In fact, last year I read that 20% of all oil transactions were done in non-U.S. dollars, and that number is slowly creeping up. What happens if this BRICS does come to fruition, or if we see a drop in the U.S. dollar? What does that do to the oil industry? What does that do to the economy? Is that a concern of yours?
Well, of course, it's always a concern. I mean, obviously, if the dollar collapsed, then, it would have a great effect on here in the United States. I mean, but I think a lot of these countries, while they are trading oil, some of their oil for the yuan and some of these other currencies, I think they do that primarily because China is the biggest buyer of their product. So obviously, if you've got a huge buyer and he's telling you, that he wants to buy, use to trade it in their currency, then obviously you're going to try to keep that customer happy. So you're going to sell some of your oil. But some of the stuff that I read, from in Saudi Arabia about BRICS, is they are willing to trade some of their oil for the yuan, but when it comes down to it, they want the dollar to be, they will continue to, the most of their oil will be sold in dollars because obviously who wants China, a communist country, to control the world currency?
Yeah, that's why I push back, like you said, on this whole BRICS thing, that this thing is going to collapse the U.S. dollar. I think there are other things that could collapse the U.S. dollar. Right. But I have a hard time believing that suddenly that there's going to be a partnership between India and China, 2 countries that hate each other, and that they're going to trust each other in creating a currency. And then they're going to basically really hurt the relationship they have with the United States, which is so important to them in so many ways, economically and militarily. So I have a hard time believing that this BRICS is really going to wreak havoc. I do think there's other things going on in our economy that could.
I agree with you there. Yeah. I mean, obviously, the debt that we have is just out of control.
Yep, absolutely. So, Mike, in the time that we have now, can we kind of shift gears to the investor? And I know you offer investment opportunities for your clients. We'll talk about that. The oil industry has been sort of in a rut for the last few months. As I said earlier, oil prices have dropped to around $71 a barrel per share now. Back in July, I looked, they were in the roughly 90s. And so they've fallen a little bit. I did read in Barron's today that one analyst, an oil expert analyst, says 2024, we're going to see a big rebound. And I'm actually cautiously optimistic about the economy of 2024 as the Fed starts to lower rates. Now, I think they're doing it politically, but it doesn't matter. It's going to rise a lot of boats, namely stocks and so forth. And I think that's going to create even more demand for oil, which is going to be very bullish, very positive for oil stocks. And he picked three stocks that he likes, Exxon, Shell, and BP. And he sees a 20% rise in those stocks. What's your take on that, Mike? How should people invest in oil? I know there's different programs for different levels of wealth. Maybe you want to talk about that.
Yeah. Well, there's a lot of different ways to invest in oil and gas. I mean, some of the main ways, obviously, is like you just alluded to, is buying stock. Mm-hmm. Now, we sell direct participation in drilling programs. Mm-hmm. So our programs, we try to diversify our investors' interest or his investment over 20 to 50 to 100 wells even. And how we do that is that we buy non-operated working interest in these shale plays up in North Dakota and Oklahoma and in Texas. And so we try to own a small interest in a lot of wells because there's, the one thing about the shale plays is that, you're drilling into an organic rich rock. Mm-hmm. So it has oil and gas in it. So every well is going to be completed as a producer. I mean, every well is going to produce oil. So where are my risks? So when you look at risk, there's two risks, primarily risk. And the first one is the price of oil. And the second one is how much oil you're going to produce. And so what we do is we try to be in the fairway because in all of these plays, for example, take the Bakken. The Bakken covers 250 miles east-west and 125 miles north-south. It even goes into southern part of Canada. So as I was saying, you want to be in the most productive areas. And that's where our team comes in. We have our own team of geologists, engineers, land people. So we're currently evaluating all of these wells that are getting drilled. So we can go out and we lease land. So every one of these wells, they're drilled they put two 640-acre tracts of land together. So you're drilling on a 1,280-acre drilling unit. And so each one of these wells cost about $9 million a piece if you were to drill one of them and take 100% of it. So we go in and we'll lease up to 120 acres inside that drilling unit. So effectively, we own 10% of the well. Mm-hmm. So when an operator gets ready to drill a well, he comes out and he basically runs a title opinion just like you would on a house, and he determines who all owns the leases. So they send out an invoice or an AFE, we call it in our business. And so once we get that, if we own 120 acres in that drilling unit, we participate for $1 million in that well. And so, since these wells are $10 million a piece, the wells have to produce about 200,000 barrels of oil to get your money back. So you want to be in areas in a fair way where the wells are going to produce 500,000 barrels plus to 1 million barrels of oil. So that's one of the risks, and that's how we evaluate that, and we try to be in that fairway. The second risk is the price of oil, which we can't do anything about. We don't have a crystal ball. I mean, once the wells start producing, we can hedge our production, or we can buy, costless collars where basically we get a floor on the price that the price wouldn't go below that, but you can't do that during the drilling phase. Mm-hmm. So take, for example, during COVID, what we call the lifting cost, what it cost us to produce a barrel of oil in one of these horizontal wells is about $35 a barrel. And so oil has to be over $35 a barrel for us to make money. If you look during COVID when oil went down to $20 a barrel, we were selling oil. We just weren't making much money, or wasn't making any money as a matter of fact. And so we basically have to have prices above $35, and that's why I don't think we're really going to see prices go below $70 a barrel. I mean, I know you hear a lot of people get on there saying, well, oil was $40 a barrel, but that was during COVID. And really, if you look before COVID hit, oil was already going back close to 70. So Saudi Arabia, the U.S., we have to have these prices in the $70 range, and that's where I think prices are going to stay, because Saudi Arabia has been very proactive in either, cutting back on daily production rates or increasing production rates because they want to keep that price at, $80 to $90 a barrel for Brent crude. That means that our crude's going to sell somewhere between $70 to $85 a barrel. And I think you're going to continue to see that, in order to keep these wells producing.
Yeah, that $40, that $40 or $20 a barrel was an anomaly. That was an anomaly due to COVID. I don't ever see that happening again. I don't think Saudi will let that, or OPEC will let that happen again.
No, I agree with you. Yeah. I mean, they really couldn't stop it because the whole country shut down, as far as that. I mean, there was 30-40% less cars on the road during that time. And of course, all the industry had shut down. And I think that was one of the main reasons why prices dropped. But again, the reason why investors invest in our type of product is also you get some very good tax advantages. You were talking about investing in stock. Well, if you invest in stock, you're just investing in, you don't get the tax advantages. So oil and gas, when you're drilling in direct participation, you have three main tax advantages, that the biggest one being the intangible drilling cost deductions. That means that everything that is intangible that's used in the drilling of a well, and about 80 to 85% of the well is intangible, we can write that off in the year that the wells are drilled. And then secondly is, due to the Jobs Act that was passed in 2017, we get a bonus depreciation on our tangible items. So last year it was 100%. This year it's 80%. It's eventually going to phase out unless Trump gets reelected in office. Then I think they'll be put back into place. But, right now we can write off 80% of our intangible items being, bonus due to the bonus depreciations. But one of the main things is that, you have to come in as a general partner. So basically, you have to be, now it's not like real estate. So in oil and gas, they have an exception to the rule where, if you build a real estate property and you take the tax advantages, then you have to be an active participant in the building of that property. In oil and gas, there's an exemption to that rule where it allows a non-operator, a person that is not active in the business, to take those tax deductions. So the investors can actually write off 75 to 80% of the wells. They can take that against their any form of income if you're a general partner. Now, our programs, they allow investors to come in either as a general or limited. So on our general partners, we carry $25 million worth of insurance per well. So we're covering all of our non-operators. So in our investment in any one of these wells is around, the highest is probably $1 million, and the majority of them are a lot less than that. So we feel we're well covered. Now, investors can come in as a limited partner. They get the same tax deductions as you would as far as being a general partner, but you can only take that against passive income. So, for example, income that oil and gas throws off is passive income, so they can take those deductions as well. So there's some great tax benefits for our type of investment.
That's tremendous. Thank you so much for clearing that up, because I had some confusion around that myself. So really, tax benefits, huge tax benefits, the bonus depreciation, the deductions, and then also cash flow, right? Yeah. Those are the two key reasons. Yeah, go ahead. I'm sorry.
No, that's the main reason we're doing this. I mean, everybody likes the tax deduction, but obviously we want to make money. So our programs throw off monthly cash flow as well. And the good thing about the cash flow is we also get a depletion allowance, which means that 15% of every dollar is tax-free.
Wow. So, folks, I hope you're picking up on this. We've got a product that is in high demand. It's not going away. It's at a low price right now relative to where it's been before. In my opinion, this is a great time to look at oil and gas projects. And due to the tax benefits, the cash flow, the monthly cash flow, and a lot of safety involved just around this investment itself. So, Mike, how do people learn more about you and your investment products? What's the best way to get to you? Other than your podcast, by the way. I don't want to forget the podcast.
Well, obviously, they can send us an email to REI Energy, or you can send it to Mike at reienergy.com.
Great.
or you can go to our website, fill out a form at www.reienergy.com, and you can fill out a form, and we'd be happy to send you some information on it.
Awesome. REIEnergy.com. Make sure you check it out. It's a really great opportunity right now, especially where the price of oil is. So Mike, thanks so much for your time. Really, really appreciate it. A ton of great information. I hope you'll be willing to come back sometime in the future and update us on what's going on in the oil industry. Thanks, everyone. Always a blast. Again, don't forget to hit subscribe because you don't want to miss future shows. Next week is all about the stock market. We've got a 30-year Wall Street veteran that's going to give you his insight and outlook for the markets. Lastly, please leave a comment. It's always great to get your feedback, your ideas, suggestions for other people or other topics that you want to hear about. And as always, have a great weekend, everyone. Aloha.
Thanks for listening and supporting Full Disclosure. If you like this episode, remember to like and subscribe and follow Full Disclosure. To make a better financial plan for your future, join our Cash Flow Bootcamp, where John shows you a safe and smart way to turn your investments into a steady income stream in a fraction of your time. Learn to make money in any market. Until next time.
This podcast is a presentation of Rich Dad Media Network.